Wow, what a crazy and yet frustrating day it has been for NIO Investor on Friday, as we saw the stock rising from as high as $54.20 and as low as $40.55. Immediately when I Google what the heck is happening, I can easily find articles from Business Insider, Reuters saying NIO tumbles 14% after renowned short seller Citron Research makes a bearish call citing increased Tesla competition. And so, the first thing that we need to find out is how credible is Citron Research, and the second thing is exactly what they are talking about. So right away, without wasting time, I looked up at Citron Research at tipranks.com. Here we have Citron Research at its success rate of 54%, ranking 32 out of 59 successful rating, and an average return of just positive 3.6%. Okay, quite credible, I see. And look at this, this was back from February 2020. Citron Research says we love Tesla and promise never to be short again. But when the computers start driving the market, we believe even Elon would short the stock here if he was a fund manager. This is no longer about the technology, it has become the new Wall Street casino. And the rest became history as we know how Tesla ended up. I mean, literally up. So really, this tells us a lot about what kind of firm Citron Research is, right? They are nothing but manipulative short seller trying to convince people to sell, and I'm not sure why would anyone listen to them with that kind of track record. Next, let's talk about Citron's bearish thesis. Initially, Citron recommended investors to buy NIO at $7 exactly 2 years ago this month. For the record, it actually went to $1.19 after they told investors to buy. And you know what? They kept quiet for the entire time. But okay, I'll take that. Anyway, long story short, Citron claims that shares will soon fall back down to $25 thanks to competitive vehicle pricing by Tesla's Model Y, as well from the fact that Tesla has sold more than double the number of vehicles in China than NIO has sold in the previous months. As Citron put it, the current share price could never be justified by the Chinese EV market as NIO is trading at 17 to 18 times versus Tesla at only 9 times on EV per sales. In short, Citron is basically saying that Tesla will crush NIO in China. In fact, not only Citron Research has been saying that, right? It has been consistently brought up that Tesla is gonna crush NIO in China. And so we're gonna ask ourselves, is Citron Research right, or is there more room for NIO to run? Well, that's only if we are looking at NIO purely as car manufacturers, ignoring its core fundamental values and software that it can offer. Right now, NIO has way too many positive catalysts ahead, and I expect NIO to continue to climb to $80 by the end of 2020. Think about it, NIO's positive catalyst for a moment. NIO has ET7 sedan coming soon, Europe expansion next year starting with Norway and Denmark. That's a very good choice in my personal opinion, as Norway makes up the final spot for the top 3 markets by total EV sales. And also don't forget the BAS, Battery as a Service strategy that makes purchasing a vehicle much more affordable. Chinese government backing, NIO's robo-taxi with Intel's Mobileye, increase production capacity to 150,000 units by the end of 2021. Last but not least, the most important upcoming catalyst in the form of the third quarter earnings report on November 17. The company will hit a new record in this quarter as deliveries increase by 150% year over year. The company's September deliveries were 4,708, followed by 3,965 in August and 3,533 deliveries. These deliveries represent a growth of over 133% year over year. Analysts estimate revenues to be $616.3 million, which is up 139.8% year over year. Its loss per share is expected to be 17 cents, significantly better than the 35 cents loss per share year over year. With the rapid increased deliveries each month, I believe its market cap will keep climbing as it closes the gap with Tesla. Fundamental performance in the months ahead will also serve as a key to the stock's trajectory. Now, before I end this video, I have to say that please invest in this stock carefully. Everything that you have seen in this video is not me trying to hype up the stock or anything, because this is NIO clearly differentiating itself from its competitors as not only a lifestyle company, but with its exceptional software and services. That's all I have for this video. As always, please do your own due diligence, and also don't forget to subscribe and hit the thumbs up button if you want to learn and watch more on my elaborated NIO research. Till then, see you again in the next video after the earnings report on November 17. See you next time.